Good day, and welcome to our Ransom's weekly wraps. This week we'll be doing things a little differently. We'll only have two news events to discuss this week, and then I'll do a bit of a deeper dive into AI. We normally just have a little kind of, 5-minute thing at the end on AI. This week we want to go more deeply into what's happening. I think, been quite some time since we've done that, and I think it's worth the effort of, discussing it in more detail. Okay. So our two topics this week are going to be a return of load shedding, along with a little mining report that came out, as well as discussing U.S. inflation. Okay, when it comes to South Africa, load shedding has been, a problem for basically this whole year and like half of last year, and the last couple of weeks or so we've had a bit of a break. Level 3 only in the evenings, no load shedding in the day, basically. And that was pretty pleasant for most people. Compare that to a point like a couple of months ago when we were doing effectively 10-12 hours a day of load shedding. So that was obviously unsustainable for a functioning economy. Unfortunately, this week we had a bit of a cold spell, and as you know, when people are cold, they put the heater on, and that caused a spike in demand, and we saw load shedding level 6 return again. Now, why is this important? Well, it indicates that number one, the Eskom and the new leadership at Eskom have not solved the problem. They were basically benefiting from the usual winter, stuff that we get from Eskom. For some reason, Eskom in wintertime generally does a bit better when it comes to capacity of production. Maybe they schedule there's maintenance levels, maybe some things are better off, like in terms of some renewables perform better in wintertime, etc. But for whatever reason, they benefited in wintertime usually, and usually we do have a high increase in capacity, and the weather wasn't that bad for like the start of winter, and therefore they were able to bring us down to level 3 between like 6 and 12 in the evenings. Unfortunately, that has not lasted, and now we are going into a colder patch, and we're at level 6. So there's no. Now I would think there's no material change in the underlying structure at Eskom that's going to make me hopeful about Eskom going forward. The second thing I want to discuss around this is that, we had some mining numbers coming out recently, and that indicates that, we are sitting in a very precarious position in terms of our fiscus. The mining numbers are not positive. We've seen a number of indicators from like the banks and the retailers, etc., that show that the South African consumers are under pressure. So I do suspect that the fiscus is going to be under pressure as well going forward. That means we are likely to see some pressure on government to raise taxes, especially ahead of next year's election, but they really can't be cutting, services. In fact, they're probably going to be promising, more services to, citizens out there, in order to, get more votes in the election. So yeah, that is load shedding. The next thing is to discuss is U.S. inflation. U.S. inflation came in lower than expected, 0.1 lower than expected, but still, it's at 3%. That's only 1% away from the target of 2%. This is, a startlingly quick move. I mean, much better than places like the European Union, and much, much better than places like the UK. So what's behind this, and what can we expect from this? Well, a number of things are positive. Of course, fuel prices are not that high. Housing played a very big part of this here. Strangely enough, the U.S. housing market really hasn't reacted to inflation, interest rates as much. But what it has done is it slowed down the growth. If you look between 2020 and 2022, housing in the U.S. went up dramatically, well above trends. We talked about houses in some cases of 350, 400,000 going for 500,000 within a period of a year. Some cases even more than that. A number of reasons behind that. Number one, people basically saw low interest rates and said, hey, if I take $1 million loan and I have a zero interest rate, I still have to owe zero interest. Or if it's a 1% interest rate, it's a $10,000 a year interest payment I have to worry about. That's not a big deal if I have $1 million house. But if it goes from 1% down to like say 7% or 6%, even from 10,000 to 6,000, 7,000, that's obviously a big problem. Obviously I'm using numbers that are a bit more generous here, but you get the idea. When interest rates are low, people were buying houses. When they had the stimulation checks coming through, when we had all these kind of other things happening, there was a bit of a housing boom happening in the US. And what we've seen now is not so much of a crash in housing prices, but just a stabilization of housing prices. They haven't come down much. This is very positive for the US at the moment, because what it means is that the US has been able to get out of the inflation cycle that we were feeling, runaway inflation in the US, while at the same time not really pushing that economy into a recession. Like I said, much of the drop in prices came through from housing. Oil prices came down a bit. Energy prices came down a bit. We saw a reduction in some food issues. Food prices are not great, but they're not terrible like they were last year, rising dramatically. All these factors come together and give us a reasonably good inflation number without having to come around with a massive unemployment number, which is what the fear had been. Like a recession in the US was almost like a guarantee in most economists' minds at the start of the year with the high interest rates coming through. What this also means is that markets are going to be going up because markets love lower interest rates. We tend to find that when interest rates are at their are heading lower, markets tend to rise. When they head higher, markets tend to fall, especially growth stocks like tech stocks. So, I'm into that AI thing, which I'll discuss in a second. But around AI, around the idea of what we're looking at in terms of technology really improving over the last little while, I've got to say that, this is going to be a bit of a perfect storm. Firstly, we have innovation that's attracting attention, and now we're going to have lower interest rates coming through as well. So, have a look at the tech sector at the moment. And finally, like I said, we're going to have a discussion around AI, around, a bit of a wrap up of what's happening at the moment and give you a little bit of a path forward. So in terms of AI, what's really happening at the moment is a couple of things. Firstly, Microsoft slash OpenAI are losing their advantage. We've had Claude, a new program coming out from a company called Anthropic. If you know much about the market at the moment, there's like two big players and a third, player out there. The two big players are Google and Microsoft, Alphabet, and Anthropic is coming behind them, and also another dark horse is Facebook as well. We're also really playing in a strong space here at the moment. I'll discuss Facebook as well in this little section. So we are seeing more competition coming through. And what does this mean? This means that OpenAI can't sit back and just basically wait for things like safety, etc., to be taken care of, because they have to do something to keep their lead. And they can't just sit back and say, oh, okay, we've got the lead of GPT-4 and nobody's close to us. That was true 6 months ago. That is not true anymore. There's a number of companies that are reasonably close to GPT-4, and there's an expectation that when Google comes out with its next version of its AI, it's going to be better than GPT-4. Okay, GPT-4, if you don't remember, was trained on data from September 2021. Now it's basically July 2023. Sorry, it's almost 2 years later. So there's been a lot of innovation, firstly in chips, in terms of hardware, also in terms of algorithms and a number of other factors. If they had to go and do GPT-4 right now with the same amount of resources put into it in terms of money, they'd get a much more powerful program. And trust me, the money is not an issue at the moment. There's going to be a huge tick up in the amount of money being spent on these things. OpenAI, 100, 200 million. Now you could easily justify spending $1 billion, maybe 2, 3, 4 billion on training these things here. In fact, I wouldn't be surprised if in a few years' time we're hitting into the hundreds of billions of dollars training up these new programs. If they are going to be giving the scaling powers that we're talking about, the emergent powers talking about, if you're going to get an unassailable lead, spending 100, 200 billion, on an AI system may not be that dumb an idea. So Claude's coming out, come out, and it's like I said, seems to be really good. Google's coming out, Facebook's coming out with a lot of stuff as well. And speaking of Facebook, there's been a real step change in that company. For a long time, Facebook has just been hiring like tens of thousands of people and getting not much in terms of return in terms of the investments on those people. In fact, they were one of the first places to follow Elon Musk's example at Twitter and, cut a lot of staff. And they followed Twitter, but more by copying Twitter and a thing called Threads right now. And according to the rumor out there, that it was like 20-something people that created Threads over a period of about, say, 6 months or so. That's the rumor. Okay. Now, Threads looks like it's going to be a viable alternative to Twitter. Why? Because Threads works off Instagram. Instagram has 2 billion users already. It's a one click. You click a button, you start the Threads like application process. Threads basically is going to get access to, let's just say, even say a third of the people in Instagram decide to click that button. That's a 600 million, user base that we talked about. Maybe not all of them stay, maybe half of them stay. That's 300 million people. That's more people than are currently on Twitter. Twitter has about 240 million people on it. So what Facebook is bringing, or what Meta is bringing, Facebook Meta is bringing its expertise in the social media space, the networking expertise, and it's not the first time they've done this. They've copied TikTok, they've copied Snap, they've copied everybody out there. They are very good at copying and then making much more money than the original person, the original people out there. Reels have already taken off massively, in the US. Because stories are taken off huge in terms of US, in the world globally. We're talking about a very, very smart team when it comes to copying, and they know how to do social media. Everything is basically, there's a term called Dunning-Kruger, which refers to the fact that people that don't know stuff think that they know more than they do, or more competent than they actually are. Facebook knows social media, knows social media. There's tricks in the trade that a new entrant like Elon Musk, who came from rocketry and came from cars, is not going to be able to grasp immediately, and we've seen that. So yeah, Threads, major improvement coming through, but also Facebook is really getting into AI in a really big way. They have the resources, they have the databases, they have all those kind of things that you require to do this. And I think that we could be seeing probably, like I said, Microsoft, Alphabet, things like Open Topic, and then we are looking forward to what Facebook is coming out as well. And there's two other players I want to put into the space here that we haven't discussed yet. That's Apple and that's Amazon. Apple has been very careful not to say artificial intelligence, but to say machine learning. I don't know if this is wise or not. It could very well be that Apple is in the situation Microsoft was 20 years ago, where they should have taken the advantage, but they didn't when it came to the new tech of mobile, etc. But who knows? And then we have Amazon. Amazon basically is working the angle from another side. They got Amazon Web Services, which I think is going to be very important for the cloud, for AI. Because I think a lot of the stuff that you need to see right now is just how AI is being implemented. And a lot of the belief is at the moment that we are going to be seeing AI come through in conjunction with the cloud. So let's just say you have your own servers in your offices and whatnot, but you want to apply some AI stuff to it. Well, you could either get the AI stuff coming into your servers, or you could have your stuff on the cloud and then the AI applied to the cloud. And it's probably going to be much cheaper, much more efficient to do it via the cloud. And so that's probably going to create a demand for cloud services that wasn't there before, where people who may have had their own databases, own servers, etc., may have decided to, hey, maybe put in the cloud, because the advantages I get by being able to basically analyze this data with the AI that's available in the cloud would be a significant advantage. Okay. And the next thing is to just give an idea as to what we expect going forward. Right now, like I said, I'm expecting something from Microsoft, OpenAI / Microsoft, reasonably sooner than they had anticipated. In the last statement we got from, one last statement we got from Sam Altman, the leader of OpenAI, he talked about the fact they hadn't started training GPT-5 yet. They didn't plan to do it for 6 months. 6 months from this time the statement was released, it's going to be somewhere like September, September, October. I think that's going to be pushed a little forward. Why? Because they don't have the time to basically, lollygag around and wait for stuff to come through. They need to be a bit more aggressive, because now they have competition, and competition that knows, that this stuff is an important segment of the market. So I would expect, instead of looking at what their timetable would have probably looked at, which is like, late 2024, early 2025 for GPT-5, I would suspect GPT-5 comes out by by the middle of next year, okay, within a year or so. Before that, we will have the next version from Google, and we will have something likely from, Facebook as well. Apple is keeping its cards very close to the chest, and so is, by the way, Amazon. By the way, we've also had new entrants to the market. For instance, Elon Musk has launched XAI, which is another AI kind of thing. And he's apparently been able to attract a lot of talent, especially from, the incumbents like OpenAI and, DeepMind, Google. So who knows what he's able to do with that. I mean, he's shown himself to be much more aggressive than Silicon Valley and able to move things faster than most people would have thought possible. Done that with rockets, done that with cars, done that at Twitter. I mean, for all you can say about Twitter, that company has changed dramatically since he's gotten a hold of it. I mean, just this week, as we were talking about it, he started monetizing accounts. So basically, if you are a big producer on Twitter, a lot of impressions coming through, etc., you'll probably get a check of a couple $1,000s. I mean, that's not peanuts, especially when you were doing this for free before. So yeah, Elon Musk is coming into play here. So we expect OpenAI to come on GPT-4 probably by the middle of next year. maybe even earlier than that. And we also expect GPT-4 to probably be 10 times the size of GPT-5, by middle of next year, and GPT-5 to be 10 times the size or so of what GPT-4 is in terms of parameters, in terms of capabilities, and who knows what emergent powers come from that. Okay, that is it for this week. Thanks for having me, and I look forward to speaking to you guys again next week. Cheers.